Ashish Gupta, who's CIO of Axis Mutual Fund, has to say about that, and whether or not he sees disruption in his own industry or changes at least in the way that fund management is done based on the various measures that are being taken on artificial intelligence of late. Ashish, thanks so much for taking the time, and good morning to you. First, on the
Morning,
IT
Alex.
space, a lot of people are wondering whether the calls were right. Of course, the calls were right. Those that were underweight before this entire wave hit. But heading forward, what do you think is going to emerge once the dust settles?
I think as you and Neeraj were also talking, I think what we have to watch out for is who are going to be the new winners, right? And I think we are very clear that if you look at enterprise spend on technology, on IT, that will increase significantly over the years, right? So every company, every business will have to adapt, and it will need to spend more and more on technology and IT. The question is that who will benefit from this spend, right? And clearly, with all the IT tools that are coming in, all the AI tools that are coming in, the per unit cost of providing the IT service is coming down, right? But with the tectonic shift that is happening in the technology, the aggregate spend by enterprise will have to go up. Now, historically, we have had track records of companies to use and say that who's going to be beneficial in which domain. Some companies are stronger, for example, in BFSI, some are stronger in telecom, and that's been used for by us to kind of project how the revenue growth for each of the companies will be. But I think now we are going to be in uncharted territory, really to see which company will have products which will have capabilities to use these tools more efficiently. And the other important thing is that the beneficiaries may not be really dependent on the size, right? So it is not necessarily that those who have large workforces will get larger share of the revenue pie. So I think that's the challenge, that even as the enterprise spend will go up, who are the guys who will benefit from this spend might be very different from what has been in the last decade or so.
Ashish, but the tendency now, and this is not just in India, but it's globally, and you saw that in the US markets overnight as well, the
Yes.
tendency now is to sell and think about implications later. I don't care right now about whether this company is going to emerge stronger or not. I will sell. And so the question to you, therefore, is this providing you with opportunities to buy into some of these high quality names, because the valuations start then looking compelling after a certain point?
Sure. So I think we are still to reach that point in the valuation. I think the starting point of valuations for many companies was not really very attractive for the kind of growth they were delivering. And I must say that in the near term, we are actually not seeing a major risk in terms of earnings and revenues. In fact, the quarter just went by, most of the companies kind of delivered revenue growth at the upper end of their guidance. And if I look at trends such as services exports out of India, last 2 months continue to be very strong. So the question is not really in terms of near-term earnings impact, but what is the terminal value you assign to these businesses, and that's where the uncertainty is. And given the cloud on that, I think we are not in a zone where the valuations are compelling, given the risk of disruption.
Ashish, Ashish, does 2026 therefore become a year, as things stand, of very bottom-up ideas? Because even within themes, there could be companies which could do well and companies could not, right? So does it become a very, very bottom-up market, or can the macro and the growth take and the higher tide take all boats along with it?
So, of course, I don't think it will be a year where all boats go up. I don't think it's going to be a one-way market. We are seeing even on the macro certain pockets showing very strong pickup, right? So, for example, if you see auto sector, even after the GST benefits of the first 2 months, continue to deliver well. But there's some differentiation coming that incrementally month on month passenger vehicle sales are growth is moderated a bit, but two-wheeler sales continue to be very strong. We are seeing pickup in commercial vehicle sales as well. Uh, we are seeing stronger growth, for example, in the cement sector. So cement volumes are growing at 10%, but steel volumes are moderating. So it's not that we are seeing every business kind of thriving in this macro. If you see retailing companies, they continue to show moderation and growth. So it's not an across the board macro pickup that we are seeing. But there are certainly themes that will continue to work, in my view. Right. So I think power is a theme that will continue to work, at least in terms of pockets, whether it is people who benefit from increasing power demand or certain segments that benefit from increased power capex, like the transmission companies. So I think there will be themes that will work, and the bottom up will work as always.
Ashish, then my question to you is, which is the dark horse sector that you're looking at? Because initially you've been talking about real estate as one, but I think that pressure continues on real estate. I'm not sure if it
Yes.
will be out of the woods. Would you change
Yes.
your opinion?
Yeah, so I think after the 26% drop last year in the real estate index, we have seen last 2 months also the sector suffer. I think the other headwind for the sector now is that if there is concern on the IT sector, the second order impact can be construed on sectors like real estate, right? So I think till market become confident about the IT sector growth, at least for the medium term, there will be pressure on the real estate side. I think one sector we expect to recover, and that has had some issues in the last 6 months, is the hospital sector. I think there were issues around pricing and friction with the insurance companies. There was some slowdown in revenue growth in the last couple of quarters, and I think that we expect should start recovering. The valuations of many of the hospital names have become a lot more attractive compared to the kind of multiples they were trading in last couple of years.
Very quickly, apart from this, Ashish, a quick view when it comes to BFSI as a space, because IT is under pressure. How are you looking at it?
Yes. So the view there is favorable. Of course, tactically, BFSI and IT are the really two big sectors, and clearly, with one sector in pressure, there is money flow that moves to the other. But fundamentally as well, we have seen strong pickup in credit growth in the last 6 months. Now we are running at almost 13-14% kind of number, something that looked unlikely just 6 months ago. You are seeing credit costs also likely to come down this year. Many NBFCs and mid-sized banks had higher credit costs last year. So I think the earnings momentum in BFSI, particularly the lending companies, will be strong. Should be around 16-17% this year.
Got it. Ashish, where is it that you believe the winners of the last couple of years might still hold forward? You know, usually they say a new cycle ushers in newer winners, but could there be a case wherein the winners of 2025, whatever few they may have been, could still continue to lead?
Sure. So I think the sector we discussed just now, BFSI, was
BFS.
one of the big winners last year. I think that should continue. I think auto sector as well. I think it was a strong performer. last year as well, and I think we should see positive momentum there as well. Of course, some of the names in the auto sector might change. As I said, we are
Right.
seeing kind of the segments in which growth is accelerating is changing.
Yeah,
But
yeah.
I think autos and BFSI would be two sectors that.
Ashish, you've written some landmark reports. I wonder if on the buy side you do that, and if we get access to that, would love to see that. And we'll anyways see you on Friday at the Access Media Dinner. But thank you so much for speaking to us today.
Thank you.